To discuss about the market strategy from here on. Mr. Subramaniam, good afternoon. How are you analyzing the market right now? Have you guys been buyers in the last 2-3 months or with this furious rally, or were you observing things?
In March, when the initial reaction was very sharp sell down, we actually invested and bought into the stocks, and our cash levels were very low. Post that, as the lockdown continued and new data points started coming in, we sort of expected the consumption basket to slow down a bit in the coming year. So we readjusted and sold or reduced our weights in certain sectors. Of course, the current one has been surprising in terms of flows, but that's happening across the globe, I guess, with so much of liquidity everywhere. Stocks are finding new levels, even though the fundamentals continue to be weak, at least for the near term.
What kind of commentary are you taking note of coming from companies after the numbers? Numbers, of course, are relatively lesser important right now, but anything which caught your attention?
The thing is, the capacity utilization has been improving. Migrant laborers, we are finding it a mix. In some companies, they are finding them coming back. In certain companies, they are still expecting that that could be an issue for some time. But in any company, you also have to recognize that there is a lot of supply chain involved. So even if one large company at the head, they are able to solve the issue, the smaller companies which are part of the supply chain may still face certain issues. And we are hearing those kind of comments as well. The other comments are clearly, of course, pointing out that rural India seems to be holding up quite well, which is positive from many angles. But those which are largely relying on urban-centric consumption, we are seeing a pent-up demand being shown right now, but we are also expecting, based on the comments and based on our own analysis, that it will be a slow improvement, probably coming in only by the back end of the year.
Sure. In fact, that works very well for investors who want to slowly deploy money into the market over the next 2-3 years. Where do you see more value right now? Is it in the upwards of 50,000 crore in MCAP all the way to mega caps, or do you think companies mid-sized ones anywhere between $2-3 billion to $5-7 billion, where exactly do you find more value on risk reward basis?
Yeah, by and large, we always focus on the more liquid names. So for us as a strategy, it is those companies which have $1 million of trading a day. And that tends to be between the mid-sized to the large-sized companies. So I wouldn't say that it is from a cap perspective where the opportunities lie. For me, the universe are the larger companies. And within that space, we are finding it a mix. As I said, if consumer discretionary looks like it will slow down, but at the same time, the stocks are not super expensive. It is within a reasonable range. The consumer staples we find still to be rich in terms of valuations. Maybe even the retail space to some extent is very rich in valuations. But banks, certain consumer discretionary, some of the PSUs, they do look attractive to us. And even the IT has held well. And I think the IT will continue to do well. And there also we find the valuations to be reasonable. The challenge with the smaller sized companies is not to do with the valuations. It's essentially that the stress, if it was very high in the last 2 months, how do these companies manage that? Whether it's a cash flow related issue or whether it's relating to staff and access to technology, those are certain things which a smaller company, I think, will find it tough to resolve very quickly. And so I would be a little careful when it comes to small sized companies. We are finding value, as I said, in the larger names as well.
How do you see the case for equities over the next 5-year period? Sure, there is a reason to jubilate about the way risk-free rates are coming down and interest rates are coming down. But at the same time, equity valuation the probability of the returns going forward will be that much lower, right? In your portfolio, which I'm assuming will be a mix of mid to large, what kind of CAGR returns are you computing or working out for the next 5-year period?
Performance, I think 14 to 15% kind of numbers we have done in the past. And the key question is really, how does the GDP pan out over the next few years? What is the new normal which we should be looking out? So based on that, one can expect the return numbers or calculate the return numbers. So I don't have a forward-looking number as to what one can expect, but a large section of that or a large portion of the return would also be dependent on how the GDP pans out over the next few years, both after it comes out of the current shock and on a normalized basis. And we know that on a normalized basis, you require many things to fall in place, including capex, government spending, etc. So those are still work in progress, while we do have a broad understanding as what is likely to take place, but I don't want to hazard a guess on what could be the return on equities. My sense is, given all these cyclical hits we have seen in the past, this COVID was something relatively new. Given the fact that we have seen SARS, we have seen high oil prices, low oil prices, all of that, there is still momentum which happens in the GDP, and it will continue to grow. And we do expect that trend to continue. The question is, will it sustain at around 6.5% or will it sustain at 5%? Those are something which we will have to clearly watch out based on how the economy performs in the next few months, and also what the government plans in terms of infrastructure spend, capex spend, etc.
Right. One last question, Mr. Subramaniam. How do you analyze this argument that the current bout of strength in the market is largely fueled by the stimulus which globally the companies are actually, the central banks are actually giving out? Also, is there an argument for value which is emerging, which could be also one of the reasons or triggers that people have started buying equity, or is it largely fueled by overseas liquidity?
There is definitely value. There is definitely a large portion of the value also came up when the markets declined in March. So I'm not questioning that there was value and there is a need to be invested based on certain long-term assumptions. However, the pace at which it moved, and that is surprising, and that I would say is largely a function of easy availability of liquidity as well, because it's not a very Indian phenomenon. You are also finding it even in developed market like S&P. If you look at the graph, it looks like almost it has reached where it was prior to COVID. And you have heard stories about even bankrupt companies moving up very rapidly. So definitely the high liquidity has an influence. While at the same time we have to recognize that in a growing economy there is still a value. Where that value will finally sit, how it will evolve, is currently a question, because there has been this huge disturbance in the last 2 months, and that has thrown up a lot of challenges for different companies, and each one will have to find a way how to resolve that. So longer term, I would expect the value argument which you are making will definitely make sense. Near term, there is always the risk. The liquidity can come in at such a rapid pace. It can also go out at a very rapid pace, even on a very small risk coming up. So let's say even if the border issue which India had, if it had escalated, maybe it would have made certain people nervous. So liquidity, that's a problem, that some or not all of them would have come based on long-term fundamentals. Some of them would be based on the availability of easy money. Some would be very short-term in their orientation. And there is always a risk, and that money can move out very rapidly.
Right. All right, Mr. Subramaniam, always wonderful to chat with you on the show. Thanks very much for your time. With that, we are completely out of time in this edition of the Newsroom. Thanks very much for watching. Goodbye.